Good morning, everyone, and thank you for choosing today's market analysis. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market analysis, September 8, 2023. The US dollar retraced from a 6-month high, marking a reversal as dovish remarks from Federal Reserve officials triggered speculation about the central bank's stance on interest rates. The Bloomberg Dollar Spot Index dipped by 0.1%, following comments made by John Williams, president of the Federal Reserve Bank of New York, who stated that U.S. monetary policy is in a good place. Simultaneously, global stock markets exhibited mixed performance. In Europe, the Stoxx 600 index inched lower, heading for its 8th consecutive day of losses, marking the longest losing streak since 2016. Futures for the S&P 500 and Nasdaq 100 also experienced a minor decline of 0.1%. The recent market turbulence can be attributed to concerning economic data emanating from Europe and China, suggesting a potential deepening of the economic downturn. European markets, in particular, have faced continuous challenges, with 26 consecutive weeks of investment outflows, according to reports from Bank of America Corporation. However, the most prominent theme dominating financial headlines this week revolves around significant currency movements and the growing disparity in economic growth prospects between the United States and the rest of the world. The Bloomberg Dollar Spot Index remains on course for its 8th consecutive week of gains, marking the longest run of increases since 2005. Laura Cooper, senior investment strategist at BlackRock International, expressed surprise at the recent strength of the dollar, raising questions about its sustainability. She suggested that as the Federal Reserve signals a potential hawkish pause, the dollar's ascent may face challenges. John Williams of the New York Fed emphasized that the central bank's policies have effectively balanced supply and demand while alleviating inflation concerns. He added that the Fed remains committed to its 2% inflation target and will adjust policy as necessary to achieve this goal. In the corporate sector, technology giant Apple, AAPL, has experienced a turbulent week, with its shares stabilizing after a 2-day loss of more than 6%, resulting in nearly $200 billion in market value erosion. The decline began following reports of a Chinese crackdown on iPhone usage among government workers, with differing opinions among analysts about its impact on the company's future prospects. As the trading week comes to a close, the Dow, S&P 500, and Nasdaq are poised for a mixed opening, with the Nasdaq entering the day on a 4-session losing streak. Apple's performance has weighed on the overall market sentiment throughout the week. In other news, the blackout of Disney, DIS channels, including ESPN and ABC, continues for Charter's, CHTR, Spectrum cable service subscribers. Analysts believe that Charter has less to lose in this dispute and view Alphabet's Google as the potential beneficiary. Truist has raised the price target for Broadcom, AVGO, to $995 per share from $942, maintaining a buy rating, citing positive numbers and accelerated AI revenue. Barclays has increased the price target for Adobe, ABDE, to $620 per share from $540, keeping an outperform buy rating, while Mizuho has upgraded the stock to buy from neutral with a price target of $630. On the other hand, Barclays has reduced Johnson & Johnson's J&J price target to $158 per share from $175, with a neutral rating, citing ongoing legal concerns and talc litigation. Procter & Gamble, PG, received a market perform, hold, rating from William Blair analysts, who do not anticipate the company's shares surpassing the overall market. In a significant development, Kroger, KR, has agreed to pay up to $1.2 billion to settle nationwide opioid claims against it and will sell 413 stores as part of the deal to address regulatory concerns associated with its proposed merger with Albertsons, ACI. Meanwhile, billionaire investor Ryan Cohen is reportedly under scrutiny by the SEC regarding his ownership and sale of Bed Bath & Beyond shares, though neither Cohen nor Bed Bath & Beyond have commented on the matter. Lastly, RH, formerly known as Restoration Hardware, bought back 17% of its total shares in the second quarter, although its stock saw an 8% decline early on Friday. Despite the cautious outlook, some analysts believe there are positive developments on the horizon, with differing opinions on the stock's future performance. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Bitcoin breaks $26K barrier amid regulatory uncertainty. Bitcoin saw a brief rally, surging by 3% to cross the $26,000 threshold on Thursday, before slipping back below during the European morning. The CoinDesk Market Index, CMI, also mirrored this enthusiasm, climbing over 2% before retracing. September has historically been a challenging month for Bitcoin, with negative returns recorded every year since 2016. Unfortunately, 2023 seems to be following this trend. Coinbase eyes global expansion amid regulatory concerns. Coinbase unveiled plans for international expansion as it grapples with U.S. regulatory uncertainties. CEO Brian Armstrong's concerns about regulatory ambiguity in the U.S. have prompted Coinbase to seek licenses and regulatory clarity globally. The exchange is targeting key regions, including the European Union, the United Kingdom, Canada, Brazil, Singapore, and Australia, with a final location for its European hub set to be announced soon. MicroStrategy's Bitcoin impairment losses raise concerns. Investment bank Berenberg believes that MicroStrategy's substantial Bitcoin impairment losses have distorted perceptions of the company's true value. The firm has reported $2.23 billion in cumulative impairment losses from its Bitcoin holdings since August 2020. Berenberg suggests that proposed changes by the Financial Accounting Standards Board, FOSB, could rectify this situation, allowing companies like MicroStrategy to eliminate the negative optics created by impairment losses. U.S. interest rate hikes aim to tame inflation. The Federal Reserve Bank of Chicago's research indicates that the series of interest rate increases since March 2022 is on track to combat inflation in the United States, reducing the need for further tightening. Economists Stefania D'Amico and Thomas King estimate that the policy tightening already implemented will exert additional restraint on the economy, potentially reducing real GDP growth by about 3 percentage points and the Consumer Price Index, CPI, by 2.5 percentage points. This modeling suggests that the headline CPI may drop below 2.3% by mid-2024, effectively aligning with a 2% inflation rate as measured by the Personal Consumption Expenditure (PCE) price index. A combination of declining inflation and a resilient economy could prove favorable for risk assets, including cryptocurrencies. In summary, Bitcoin's recent price action and regulatory uncertainty, Coinbase's global expansion plans, MicroStrategy's accounting challenges, and the Federal Reserve's efforts to curb inflation are all critical factors influencing the financial landscape. Stocks. S&P 500 futures were little changed as of 8:23 a.m. New York time. Nasdaq 100 futures fell 0.1%. Futures on the Dow Jones Industrial Average were little changed. The Stoxx Europe 600 was little changed. The MSCI World Index was little changed. Currencies. The Bloomberg Dollar Spot Index fell 0.1%. The euro was little changed at $1.0704. The British pound was little changed at $1.2480. The Japanese yen was little changed at 147.36 per dollar. Cryptocurrencies. Bitcoin fell 0.5% to $25,863.82. Ether fell 0.6% to $1,628.05. Bonds. The yield on 10-year treasuries was little changed at 4.25%. Germany's 10-year yield was little changed at 2.61%. Britain's 10-year yield declined 1 basis point to 4.44%. Commodities. West Texas Intermediate crude rose 0.9% to $87.63 a barrel. Gold futures rose 0.2% to $1,947.10 an ounce. In conclusion, we'd like to thank you for watching today's market analysis. If you enjoyed our insights and found the information helpful, Please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.